Good evening or good morning, given wherever you are in the world. I'm back. Hopefully I'll start to do daily videos now, discussing each and every single market. Whatever time I have, I'll try and obviously spend, obviously I'm focusing on the markets, etc. and applying my inter-market analysis approach going forward. And now I'm just going to be discussing the FTSE 100 today. I'll just focus on technicals for now. I'll try and elaborate in terms of fundamentals as well. Obviously this morning, or shall we say Monday, we went thrust higher again. We keep making higher highs and higher lows. The most important chart really is a daily chart on the FTSE 100. I'll just bring that up now. Okay, here we go. So obviously we're into horizontal resistance here. The last fib retrace that we've had, we've held at 75% on numerous occasions, even on the weekly chart. There you see there's a lot of resistance in this region, so this is going to be one hell of a level to tackle. I know a lot of individuals that are trading did get stopped out on a lot of their platforms overnight. A lot of spikes, a lot of shenanigans going on with a lot of these market makers at the moment, because this level is quite an important level, so there must be a lot of stops just above here. So it should be quite interesting. Obviously, looking at it from just purely, obviously from a technical point of view at the moment, obviously we had this symmetrical wedge that was potentially forming. We did it, obviously everybody expected it to move to the downside, given the fact that the economy at the moment globally isn't exactly spectacular, with QE1, QE2, QE3 all failing. Obviously you've had the US debt ceiling recently, America being downgraded. We see economic data has not exactly been spectacular, so fundamentals obviously are stating lower, especially with the talk of higher rates in the UK. Now over the weekend we did have a Bank of England individual talk about higher rates, and obviously with the advent of Mr. Carney as well, the markets are obviously thrusted higher. Now the slight problem with this move here is that the move isn't really being supported globally at present. Now if you look at a chart of, let's bring the chart of Shanghai, and this is something that we've been discussing recently, quite important I think from my perspective, is that Shanghai really hasn't been breaking out or making any new highs. If anything, it's got a series of lower highs at the moment, and you could certainly argue it's in a symmetrical wedge pattern as well. Even with excessive stimulus, obviously they're trying to destroy the yen over there in Japan and fight deflation, and yet still we failed really to sort of propel higher. So again, there's a divergence there. Also, if you look at the chart of the Shanghai index, if I can just bring that up and hopefully give you an insight on that as well. Again, you know, you have a bullish channel, okay, on the verge of a breakdown south. Even with strong economic data, we've not really been able to propel and move higher. So adding the debt ceiling, adding lower GDP, even the Chinese data that was released last week, everybody knows it's cooked, and 50% of that was due to Chinese stimulus as opposed to organic growth. So again, some real concerns there going forward. And if I just go back to the FTSE, we're going to focus on the lower time frames. We know that the weekly and the daily, as I've already shown you, we are into a solid resistance now around the 6660 level. We could spike up to 6700, but very unlikely, given the fact that we've had a doji registered tonight, okay, on the Nasdaq. Obviously you've got a doji in the S&P there, you've got a doji on the Nasdaq again as well at trendline resistance, and you've got several unfilled gaps below. You have an unfilled gap over here as well, so we've got a gap fill here at 3,300, and we've got a gap fill here around the 3,140 level, which are acting like magnets from the downside. Just quickly run through the Dow Jones again. Is below the 75% level and is at horizontal resistance, and we all know the correlation between the FTSE and the Dow, so that's quite important as well. Although the Dow Jones Transportation Index is a tricky one. Obviously I've put the chart up on my website, so if you want to, I mean, I do update my website on a daily basis, so if you get some time, certainly go ahead and review the charts on there as well. I tend to upload them on a daily basis. I'll just show you here. We can clearly see here, so we've got a lot of these charts here at the moment. So yeah, definitely, so you can certainly see that there at the moment. So keep an eye on that website there. I've got recommended reading. I've updated a lot of information there as well. Obviously, I update my charts on a daily basis. The chat room at the bottom as well that people tend to get engaged in. So if anybody wants to pop in there, certainly have a look and keep an eye on there as well. It's inter-market-analysis.com is my website. Okay, so going back to the FTSE 100, we're going to focus on the smaller time frames now. Okay, so if we look at a 60-minute chart, obviously there's a lot of resistance again, slap bang into resistance around the 6650, 6660 level. Okay, so again we've got unfilled gap below, so that's going to act like a magnet and force price action lower. Okay, so obviously this market keeps steamrolling, which is quite a tricky one really to fathom at the moment. We keep going higher, higher highs, higher lows, and the trend continues. Obviously it's all based on euphoria over the QE. Ever since Janet Yellen came in, the market seems to ignore all types of resistance, all forms of resistance, and is intent in going in one direction, which really doesn't bode well. Obviously it brings back the memories of the flash crash that we witnessed not so long ago, where the market was a froth and kept moving higher based on no volume, no news, just constant short squeezes that were obviously triggered by central banks. So it's a tricky one. But we have to obviously price action is price action. We have to respect that. Okay, regardless of what the fundamentals tend to be, price action is price action. But fundamentals do give us an insight, especially via intermarket analysis as well. Okay, and we have to respect that too. But at this very moment in time, it's all about QE. Okay, that's what it all comes down to. The delaying tapering, given the fact that the economic data is not available in America at the moment due to the shutdown. Okay, they've obviously sworn in Miss Yellen, who's a crazy nutter in my opinion, worse than Bernanke times 2. Although people may have misconceived her as ultra dove, we still have to see exactly what she's capable of. But she was put in there for a reason, especially given the US debt ceiling. So I can't see her being any different. Ultra QE. So we can't really focus on QE either. Okay, so from our 60-minute chart, this bullish channel that we have at the moment, from my perspective, we are going to break lower, especially given the fact that we've had talk of higher interest rates in the UK, especially considering in terms of the Eurozone, in terms of the US. UK will be the first one to raise rates, and that will obviously hit the commodities market, which has been hit today. Obviously, oil was down below $100 at one time. Gold has consolidating, but again, that's due to geopolitics as opposed to anything else. Obviously, with the debt ceiling at the moment, they've kicked the can down the road. You've got the likes of QE obviously continuing as well for easy money, and so obviously gold will always be a safe haven. And the fact that the US dollar is losing its reserve status, that alone is pretty negative as well in terms of the dollar. So generally speaking, where money tends to flow to 3 areas when there's uncertainty and risk in the market, and that's bonds, dollar, and gold. Okay, and the bond market, obviously, we know in the UK, in the US right now, is vulnerable given the fact that they can't even pay their bills on time. Okay, and adding the fact that the US dollar is losing its reserve status, so it's lost its credibility in the world, especially with the Chinese now thinking of floating their renminbi and allowing that to be the reserve currency, even the euro. I mean, how ironic is that? The fact that the euro has almost become a reserve currency as opposed to the US dollar, given the concerns just a year ago, and a lot of people talking that down and claiming that it was going to crash, especially Mr. Soros. So interesting juncture at this very moment in time. But again, like I said, I do expect this channel to break lower, for us to move lower, and that is in concert with the Shanghai index. You have a bullish channel there that should eventually break lower as well. Okay, so as they withdraw stimulus, because a lot of the property prices in China right now are going out of control, and that's the only way they can tame it. Okay, now we've got a 10-minute chart of the FTSE. This is a tricky one because every bearish pattern so far has broken and actually led to a short squeeze. For example, this morning I expected this pattern to play out. Okay, we've got a nice, so initially we had a bearish engulfing candle straight away at the open, which is no surprise considering they stopped everybody out overnight. I think they went as high as 6, 7, 10 on certain brokers such as I think it was Capital Spreads and Intertrader, but I trade with IG Index and they are honest and have more integrity than the rest of them, and their high was 6681. So I had a stop loss of 6683, so that was protected. so I was safe from that perspective. So, but I still maintain my short bias in this. I mean, we had this head and shoulders formation in the morning, which eventually, unfortunately, was negated. So that's just another pattern or bearish pattern that's being negated right now. It's unfortunately QE frenzy at the moment. Okay, we had another bearish pattern here. I expected this H&S formation to play out given the symmetrical wedge and to actually break down and eventually go and close the gap below and hit the 200 MA. You had a beautiful H&S setup there, which again, unfortunately, it's a shame it failed as well. You had your left shoulder there, you had your head peak there, right shoulder, and boom, down we go. But unfortunately, we failed to do that, and we failed to test the lower channel, and the markets continue to short squeeze higher. So, in essence, I think the best way to sum up the last 9 days of trading, which, to be honest with you, my trading results have been very poor over the last 9 days or 10 days. Those that are on the live analysis service know. Usually, I mean, I tend to easily achieve 200-300 points within, say, 2 or 3 days trading. Sometimes, I mean, the last a few weeks before the last 9 days, on average, I was making around 500 points a week. So, from my perspective, it's very, very hard to read these markets because there's only one way they're going. It's vertical, and all resistance levels are being destroyed. All potential bearish patterns are being destroyed. It's just a one-way market. So it's an investor's market as opposed to a day trader's market from my perspective. Okay, until we return to some sort of normality. Hopefully tomorrow's data will bring it to some sort of normality, or bring it back to reality, should I say, because they're currently in cuckoo land at present, with markets making new highs, higher highs considerably just over and over again. So hopefully tomorrow we should get some action. Obviously these markets at the moment, especially the American markets, I mean, it's just gap and go. So they make all their move overnight, they gap higher, they close the gap, and then obviously the markets tend to shoot higher again. Although in the US today we have created a head and shoulders formation, so just keep an eye on that. We've broken the bullish channel, and we have created a head H&S formation going into tomorrow. So from an intermarket analysis perspective, that does give me a reason to believe, or gives me a very strong justification or an argument to expect the markets to obviously slide potentially overnight, given the Shanghai has a bullish channel that's vulnerable to being broken southwards, and obviously a lot of people front running the bad economic data that will be coming out tomorrow, given the debt ceiling and the loss of confidence in the US government. So should be an interesting day tomorrow, so we're going to keep an eye on that. Yeah, so my view certainly is bearish. That's why I expect going into tomorrow, going into the week, especially given the hot air and the unfilled gaps that we've left behind. I mean, even on the S&P, you've got a gap as low as 1700 region that needs to be closed as well. Again, I must stress that this is my own trading opinion. These are based on my analysis, based on my trades. I don't encourage or recommend anybody to obviously adhere and to follow me. I always encourage people to do their own analysis, do their own research, and obviously or make trades based on their own obviously understanding and analysis. Now there is a legal disclaimer there on my website, so certainly have a read of that. Obviously any opinions, news, research, prices, etc. Obviously is quite important for you to read. So I wish everybody good luck for Tuesday's trading. Obviously it's going to be quite volatile given the economic data that's going to be released. And always remember, wax on, wax off, risk on, risk off. Goodbye.